Motley Fool claims they found a stock with a chokehold on the materials AI cannot function without. I reveal this stock so you don't have to buy their newsletter. Before we do anything, let's look at the Fool's recent track record to see how good they are. They recommended ASML in August 2024, and the stock has been volatile but is up overall. They recommended 3 AI stocks in September 2024, and the first was Alphabet, and it's up 50% since. The second was Amazon, and it's only up 14% since. Meta was the last of the 3, and it's up over 30%. They recommended 2 energy stocks in November 2024, and the first was Lincoln Energy, and it's up. The second was BWX Technologies, and this is up too. The Fool recommended 5 microcaps in February 2025, and the first was Serve Robotics, and it's been volatile, but it's up. The second stock was Kiniksa Pharmaceuticals, and this stock has done really well and has basically doubled since. The third stock was Iterin Location and Control, and it's been up and down, but it's down overall. Carrot Packaging was the fourth stock, and it's down overall as well. Last was Karoo, and it is up slightly. Let's shift back to the email now and figure out the stock. Here's what the email says. Most investors have never heard of this critical AI stock, a company 1/8,000th the size of NVIDIA, with a chokehold on the materials AI cannot function without. Most investors are currently missing what could be one of the biggest under-the-radar winners of AI. This company is quietly refining the rare earth metals that make AI, EVs, and advanced semiconductors work. I'll be honest, I hadn't heard of it either, until a colleague dropped a short report on my desk and said, "You need to see this." Once I dug in, I realized this might be one of the most compelling opportunities I've come across in my time at the Motley Fool. Let me quickly explain why this setup is so rare. It all starts with critical rare earth materials, like magnets and gallium. They continue and say, these aren't optional. They're essential to building the chips, cooling systems, and high-efficiency motors powering AI and defense tech. The problem? More than 90% of the supply still comes from one place, China. And just recently, China started restricting exports, which resulted in governments scrambling for stable domestic alternatives. That's where this tiny 450 million Canadian dollar firm comes in. With facilities in North America, Europe, and Thailand, it's one of the few suppliers positioned to meet the moment. The CEO said it best. The phone is ringing off the hook. Everybody wants to talk about how they can satisfy their demand out of our facility. Almost no one on Wall Street is watching, but this company could be a backdoor winner of the entire AI boom. I'm going to reveal the stock in just a moment, but first, I want to tell you about my brand new quantum computing investing course. Over the last few months, I went all in on understanding quantum computing. I studied the technology, the companies, the business models, and the investment timelines. And I want to share everything I discovered. Inside this course, you'll get 15 ebooks designed to take you from beginner to expert in quantum investing. Here's what's included. A complete guide on how to invest in quantum computing. 14 deep dive company breakdowns covering well-known large caps leading the industry, smaller pure play innovators with massive upside potential, international quantum leaders most people overlook, plus private quantum companies to watch before they go public. This is the first product I've ever released, and I wanted to make it truly valuable, something I'd personally be excited to buy. So if you're interested in my findings and want to get ahead in one of the most explosive tech sectors of the decade, click the link in the description below to get these guides for just $39. But act soon because I'm only going to be selling this for the next 7 days. The stock being pitched here is Neo Performance Materials, and you can get this over the counter with the ticker NOPMF. Here's what to know about this stock, and after I'll tell you if I'd buy. Neo Performance Materials stands as a leading global manufacturer of rare earth materials, advanced magnetic powders, and specialty chemicals that form the backbone of modern technological infrastructure. The company's products are mission-critical inputs for applications ranging from electric vehicles and industrial motors to consumer electronics and renewable energy systems. This positioning places Neo at the intersection of multiple high-growth secular trends. With operations spanning 3 continents, Neo has built a vertically integrated supply chain that extends from raw material processing through finished product manufacturing. Neo's recent opening of a cutting-edge permanent magnet production facility in Narva, Estonia represents a strategic milestone in addressing Europe's critical materials independence. This facility positions Neo as a key non-Chinese supplier in the European market at a time when geopolitical considerations are driving demand for supply chain diversification. The location provides advantageous access to European automotive and industrial customers while reducing logistics complexity. The Narva facility incorporates advanced manufacturing technologies and sustainable production practices, aligning with EU environmental standards and customer sustainability requirements. Neo Performance Materials is positioning itself as a key player in the electric vehicle revolution by supplying the high-performance magnets that power EV traction motors. These magnets are critical to drivetrain efficiency, power density, and overall vehicle range, 3 of the most important competitive metrics in the automotive market. To solidify its position, NIO has secured major partnerships with top-tier automotive companies, most notably a multi-year supply agreement with Bosch, one of the world's leading auto suppliers. This deal not only validates NIO's technology, but also ensures recurring demand. To meet the surge in global EV production, the company is actively scaling its manufacturing capacity, allowing it to serve the rapidly expanding market and become a strategic supplier at the heart of electric mobility. NIO Performance Materials is strategically positioned at the intersection of several powerful, long-term growth trends that are transforming global industry. The rapid electrification of vehicles is driving demand for advanced magnets used in EV motors across every automotive segment. At the same time, renewable energy expansion, especially wind power, relies heavily on these same high-performance magnetic materials to generate electricity efficiently. Beyond energy and transportation, industrial automation is accelerating worldwide, with robotics and precision manufacturing requiring advanced motor technologies that depend on NIO's specialty materials. In consumer electronics, the push toward lighter, smaller, and more powerful devices fuels the need for highly engineered materials that deliver performance in compact form factors. Even the aerospace and defense sectors turn to NIO for premium, high-reliability materials that can withstand extreme conditions. By serving all of these markets, NIO is not tied to any single industry. It sits at the center of multiple secular megatrends, giving it diversified demand and exceptional long-term growth potential. NIO Performance Materials has delivered steady financial momentum, with consistent revenue and EBITDA growth driven by expanding customer relationships and increasing production volumes across multiple business segments. This top-line strength is supported by a disciplined balance sheet. Debt levels remain manageable, and the company maintains solid liquidity to support day-to-day operations as well as strategic expansion. Management has also demonstrated a clear commitment to shareholder value through regular dividend payments and opportunistic share repurchases, signaling confidence in long-term performance. Importantly, this capital return strategy is balanced with the financial flexibility needed to pursue organic growth initiatives and potential strategic acquisitions. While profitability and cash flow generation remain areas to watch, NIO's revenue trajectory, operational leverage, and positioning in high-growth markets point to improving fundamentals and strengthening financial performance ahead. So what do I think about this stock? Well, first off, this company is definitely benefiting from the desire of Western governments to decouple from China, who basically owns the entire rare earth industry. China currently runs 90% of the rare earth market. This is a problem because there are tensions between the West and China, and those tensions don't seem to be going away. There are trade disputes and there are issues over Taiwan and the possibility of China invading. China has cut off certain rare earths to the US in the past, and America needs those to build missiles and more. So there is a real desire to bring the rare earth supply chain away from China. However, you can't just snap your fingers and rebuild the entire supply chain in the West. It's going to take a serious amount of money and time to do. NIO Performance isn't currently profitable because of this. The stock is trading at a premium because of its expected future performance, not how it's performing now. That means setbacks can send the stock tumbling, and there are bound to be setbacks when you're trying something as big as relocating an entire supply chain. The stock is up over 100% this year alone and approaching all-time highs, levels we last saw when EVs were expected to be bigger than they ended up being. Waiting for a better entry point is probably the smart move right now, but I still think this stock has room to grow. It's just going to be volatile in the years ahead, and there's a real risk of the stock crashing if things don't go as planned, or if EVs slow down again. Before you leave, make sure to check out my quantum investing course, which is only $39. This course comes with 15 ebooks, including a quantum investing guide and 14 deep dives into different quantum companies. If you're interested, click the link in the description to get it, but act soon because this will only be available for 7 days.